You want more consistent trading results? Learn to marry the higher time frame with the lower time frame. Two-step easy method. Number 1, higher time frame Heikin Ashi candles. Number 2, contraction zones to master your trading bias. First, you need to understand this: the scale of time frame interest. As you can see, we've got the lower time frames going all the way up to the higher time frames. The smaller the time frame you're on, the more there's fast, small money that's active. This is lower time frame liquidity. The higher the time frame, you get the slow, big money. And this is higher time frame stability in the market. Understanding this will help you increase your win rate. By basing your initial analysis on the higher time frame, you align your strategy with those who control and move the market. You don't want to trade against the market makers. You want to trade with them. Higher time frame stability, lower time frame liquidity. We use our higher time frame for bias. You can use the weekly, daily, 4-hour for your higher time frame bias. The higher time frame is the stability. Then we use the lower time frame for entries. You can use the 1 hour, 15 minute, 5 minute for lower time frame entries. This is the low time frame liquidity. The higher time frame is your way to predict the future. Higher time frame clarity. When you can accurately forecast the probability of the higher time frame, trading on the lower time frame becomes easy. The key is to develop a higher time frame bias to one side of the market. This will make your life easier and keep your win rate high. Analyze the higher time frame correctly, and the lower time frame will take care of itself. In a moment, I will share with you 2 easy ways to identify your market bias correctly. Number 1, Heikin Ashi candles to help us with the trend direction. Heikin Ashi smoothens the candles and makes it easier to see the trend. First, we look at a higher time frame, such as the weekly. And as we can see on the Heikin Ashi, we get these flat backs. And then we get indecision, flat back, indecision, flat back, indecision, flat back, flat back. The weekly time frame is a strong indication of what's happening longer term. It reflects the big slow money's movements. And we have the daily chart. The daily chart gives us a higher time frame bias, so we know what direction to look for entries on the lower time frames. As you can see here, we've got flat back, flat back, flat back, and then we've got a bunch of indecision candles. Flat back, indecision, flat back, indecision, multiple flat backs. As you can see, these multiple flat backs, they become the trend. So we want to ensure that we've got these flat backs happening, which gives us a signal that there's a trend going on in the lower time frames. The daily time frame is a strong indication of what's happening longer term. It reflects the big slow money's movements. As you can see, we've got these 3 flat backs. So there's a downward trend going on. We see the 3 flat backs in a row showing a defined trend happening now. This is the Bitcoin daily chart. We look on the higher time frame to get an accurate bias. As you can see, we've got these flat backs which show this defined trend. So our bias is downtrend. Now we combine the contraction with the Heikin Ashi. Number 2, contraction zone. The point where the big money wants to move the price. So as price starts constricting and contracting into this squeeze, as we see a low high and a higher low, we draw a box around that. And that is the start of the contraction phase. We wait until price expands outside of the box. Price breaks above and below the box, which confirms the expansion line. So it's got to break above and below to confirm the expansion line. Which side of the expansion line does price settle? So price breaks above and below, and you can see it settles below the expansion line with this downtrend. Whichever side price settles on will be the bias we trade on the lower time frame. Price is below the expansion line with 3 flat backs to the downside. This concludes our bias is short on the lower time frame. Then we go to the lower time frame and look for short entries. 15-minute lower time frame to look for our entries. We're on the 15-minute Bitcoin chart looking for our lower time frame entries. We mark out all the expansion lines on the lower time frame chart and look to enter above the expansion line for short entries. Since the higher time frame is confirmed a downtrend bias. So as you can see, we get our expansion boxes, price breaks above it, and we look for a short entry. Expansion box, price breaks above it, we look for a short entry. Expansion box, price breaks above it, we look for the short entry. Price breaks above it, short entry, and short entry. Whatever bias is confirmed on the higher time frame, we drop down to the lower time frame and only look for entries in the same direction. As you can see, we're on the daily chart over here. Price is below the expansion line on the higher time frame. Therefore, the bias is short. We jump to the 15-minute lower time frame and we look for counter trend entries above the expansion line on the lower time frame. Since our higher time frame is short, every time price creates a contraction box and breaks above it, that's when we look to take a short entry on this counter trend. The best way to always be on the right side of the market is to align your lower time frame with the higher time frame. Here's a long example. Once we clear on the higher time frame bias, we look for entries on the lower time frame. As you can see, we're on the daily chart here, and we can see Heikin Ashi is showing this uptrend of flat backs. Therefore, we conclude the daily chart is looking bullish. We come down to the lower time frame, 15-minute, and we're looking for long entries below the contraction boxes. So as you see, a contraction box is formed here, price breaks below it. We look for our entry below it. Contraction box, price breaks below it, entry, contraction box, price breaks below it, and entry. Lower time frame entries. When price is above value, it's a bearish sell. When below value, it's a bullish buy. So if on the higher time frame, it's bullish, we're only looking to enter our long positions below the expansion line, below the value line. And the opposite when it's bearish. Before we go any further, make sure to smash that subscribe button so I can continue to bring you high value trading knowledge. Now it's time to have a look at a trade breakdown. I'm going to be taking you through a smart money concepts trade breakdown, 274%. Here we are on the AXS USDT chart, and I always like to start on the higher time frame. As you can see, I'm on the daily time frame over here, and I've marked out 2 points over here. I entered this trade over here and I exited over here. So first what we do is we mark out the contraction zones. And as you can see, here's the first spot where we get a higher low and a lower high. Price broke below and above, so it confirms it as an expansion line. As you can see, price is respecting this expansion line. And we see this break in structure over here. We mark out this indecision candle. This becomes our supply zone. So I marked out my chart like this, and I noticed, first of all, if you can look here, we're on a downtrend. It's pretty clear. So I was leaning towards downtrend. Then we got this break of structure. I saw this indecision candle over here, and I saw the daily contraction box. Price came up, tapped into the supply zone with these big wicks showing rejection to the upside and rejection to this expansion line. This was giving me confirmation that price is going to lower prices, and my bias was short on this trade. And I wanted to get a bit of a closer look, so I went down just to a 12-hour just to have a bit of a closer look. Oh, we can see this very nice indecision candle. So we just start nestling in our zones, getting more specific with them. I saw price rejecting this area over here. Then I went on to even a lower time frame, a 4-hour, and I'm looking for a confirmation entry. So here we go. I entered on this line and I exited on this line over here. And let's look at why I took this trade. I was actually late on this trade, to be honest. Price tapped into this higher time frame supply zone over here. I saw these massive wick rejections to the upside. Then I just waited. I saw price broke structure here again. As I saw this break in structure, it left behind an indecision candle, which became our supply zone on the lower time frame. Then I went into even another lower time frame. So price came up, tapped into a higher time frame, which was the daily, but I wanted to wait for a confirmation. Came down, I waited for a break of structure over here, left behind another supply zone on this indecision candle. Price came back up, tapped into this indecision candle. Let me go into a lower time frame. Here we're on the 1 hour, so price came up, tapped into this supply zone over here. Then I waited for another break in structure for the confirmation. As price broke the structure over here, I noticed this momentum candle. this big momentum candle over here. This momentum candle hits, and that is my confirmation to enter this trade because I see volume entering the market over here. So I enter right over here, place stop loss above this wick over here, and I hung on to this trade for a long time. My target was the low of the range over here by these wicks, and from entry to targets, 27% with the risk to reward of 7.69 on this trade. So let me just break it down again. Marked out the daily expansion line over here. We got the daily supply zone, and I saw that it was on a downtrend. Price tapped into the zone. I see these massive rejections to the expansion line and the daily supply zone. I get interested. I wait. I see a break of structure over here. I mark out this supply zone, and that is where I'm going to look for my entry. Price came up, tapped into this supply zone. I went into a lower time frame. I saw price come up, tap into the supply zone, saw more wick rejections here, and then I waited for it to break structure again. Broke structure with this momentum candle and this engulfing candle, and I entered right on the break of that candle. It was not the best entry or the best risk to reward, but it turned out to be a very profitable trade. I ended up holding this trade since the 11th of December till the 30th of December, so 20 days I held this trade. There were many times where I could have taken profit, but I just let it go because this was my target down here. Ended up hitting my target. Very successful trade, very textbook, smart money concepts trade. If we wanted to re-enter the trade, as we got this break of structure over here, we can see it left behind these indecision candles. This zone could have been a re-entry into the trade, but I didn't do that. I just held my position, diamond hands, and we were victorious at the end of this trade. Very successful,